Hey there. Today we're talking about brokers, who they are, and why you even need one. This video will help you figure out who's actually helping you make money in the stock market and who's just pretending. Stick around till the end so you don't end up losing your money by picking the wrong kind of middleman. Don't forget to like and subscribe to support the channel. Imagine this. You've decided to buy some Apple or Tesla stock. What now? You can't just hop onto a stock exchange website and click buy like it's an online store. To access financial markets, individuals need an intermediary, a broker. This is a licensed professional in the world of securities who opens the door to investing for you. Without a broker, you're locked out. By law, only licensed intermediaries can carry out securities transactions. Your broker technically follows your instructions, buys and sells securities in your name, but they don't make decisions for you. Professional brokers don't just give you access to stocks. They offer access to bonds, currencies, ETFs, and derivatives too. They help you open brokerage and custodial accounts, which you'll use for all your financial operations. But remember, your broker is not a magician or financial advisor. They simply carry out your commands. If you want to invest wisely, you've got to know what you're doing. Still, brokers do more than just push buttons on your behalf. The brokerage world has changed drastically over the past 30 years. Back in the day, if you wanted to buy a stock, you literally had to call your broker, tell them your terms, and wait while they found a buyer or seller. It was a slow and clunky process, not for everyone. But everything changed with the rise of the internet and digital tech. Now it's a whole different game. You install an app, open an account in 15 minutes, top it up with your card, and within minutes, you could own a piece of Amazon. Today's brokers offer trading platforms, educational content, research, and portfolio reviews, often for free. Orders get sent straight to the exchange automatically, no human interaction needed. But despite all that automation, the broker is still the key player. Without one, the trade won't happen. They're still your gateway to the investment world. Just keep in mind, brokers are businesses, and they make money. Join our Telegram channel to get updates on new videos and articles. You'll find the link in the description or the top comment. The main way brokers earn money? Commissions. Every time you buy or sell an asset, they charge a small fee. It might be a flat rate or depend on the size of the trade. On top of that, brokers might also earn from custodial services, margin lending, paid consultations, and online courses. Some charge fees for deposits or withdrawals, for holding securities, or even for placing a phone order. But that doesn't mean brokers are out to drain your wallet. Most modern platforms offer solid functionality, detailed analysis, trading tools, reports, demo access, and even tax support. Plus, most pricing plans are competitive. Market swings within a single day can matter way more than the trading fee. Still, even if all fees seem fair, you need to know how to pick a good broker and avoid scammers. The first thing to check is their license. Only licensed brokers can legally operate on exchanges. You can verify their license on your country's financial regulator's website. Next, look at their reputation. Check broker rankings, read reviews, see how many clients they have and how much trading volume they handle. Convenience also matters. Do they have a mobile app? How responsive is their customer service? Can you open an account online? Do they offer demo accounts and learning tools? This stuff is especially important for beginners. Also, review their fee structure, commissions, custody fees, withdrawal terms, and don't forget to look at what markets they support. Can you trade on international exchanges? Can you buy foreign stocks through your investment account? Those things could seriously shape your investment strategy. But even with the perfect broker, don't fall into this common trap. This is probably the number one mistake beginners make. A broker is not your financial advisor. They don't analyze the market for you, they don't promise profits, and they won't take responsibility for your losses. Their job is to carry out your order correctly and on time. Sure, some brokers offer analysis, forecasts, news, and even signals, but those are just tools. The final call is always yours. You decide what to buy and when to sell. The broker's just the driver. You're the one who sets the route. If you take a wrong turn, it's not the driver's fault. Now you know how things work. But there's one last thing you need to understand: safety. We've published a new article on our website. You'll find free content about stocks, bonds, and ETFs, whether you're a beginner or more advanced. Head over there and don't forget to bookmark the page. Online brokers make investing easy, but scammers take advantage too. Fake brokers are popping up more and more online. They promise huge returns and guaranteed profits. They might be based offshore, lack proper licenses, and use pushy marketing. Their goal? Trick you into sending money to an investment account that's actually owned by fraudsters. To avoid getting scammed, never work with unlicensed companies. Don't trust anyone asking for payment in crypto or anonymous wallets. Never share your passwords or verification codes. A real broker will never ask for that stuff. Double-check the website address. Trusted brokers have clean, easy-to-find domains. Before you open an account, talk to support. Ask questions and see how fast and knowledgeable they are. Remember, even if the broker seems legit, read the user agreement. Don't rely on sweet talk from managers. Only written agreements carry legal weight. Your money, your responsibility. Protect it. Brokers and banks? Totally different worlds. Banks manage your money. They hold it, issue loans, pay interest. Brokers work with investments. They execute trades and manage securities. These days, the lines are blurring. Lots of banks own brokerage firms, and some brokers are getting banking licenses. The main difference is what they do. Your broker won't give you a mortgage or a credit card, but they'll let you invest in stocks, bonds, and ETFs. Your bank does the opposite. Another key point: access to markets. Brokers offer international trading, tax-efficient accounts, analytics, education, and testing strategies. So if you want to keep your money safe, go to a bank. If you want to grow it, go to a broker. Just take your time. Details matter. When we say broker, we usually mean the stock market. But that's not the only game in town. There are insurance brokers who help you choose a policy, real estate brokers who connect buyers and sellers, even art brokers, middlemen for buying expensive paintings and collectibles. What all brokers have in common is this: they're intermediaries. They help close deals, find good terms, reduce risks, and streamline the process. Each field has licensed pros who can access markets the average person can't. Smash that like button and subscribe. You can also support our content on our membership platform. Links in the description or top comment.